Hey, good morning. Let's go over today's trade plan. So in the overnight session, we saw that sellers were more dominant, and we essentially retraced the upside move that we saw in yesterday's regular trading hours. At this point, heading into the open, the bias is relatively neutral, but holding above 60 half to 62 half would still leave yesterday's upside breakout intact, and at that point, we can establish value and balance at higher prices. But at this point, the breakout idea or the strong directional conviction idea from yesterday has already been invalidated, and the market is now simply bouncing within a range. Also have to keep in mind that today is the last day of the month, and that can also result in a bit of two-sided activity, some squaring of the books. On the econ front, we have the Chicago PMI out a few minutes after the open, and then consumer confidence at 9 a.m. Central Time. So keeping those reports in mind, it adds to the two-sided nature that we can see in the first 30 minutes. And then perhaps after the econ reports are out of the way, we can actually get some clarity on direction. But so far, the way the market is setting up, it is setting up for a balanced two-sided session where any pullbacks into support can still be good long setups, and pops in resistance can actually provide decent short setups as well, as long as there is enough downside potential. So that's something that will have to be gauged in real time. But heading into the open, 60 half to 62 half is really the primary support from yesterday. And again, if we can hold above here, then we can balance at some higher prices. A break of 60 half, 62 half would indicate short-term weakness, and at that point we can go down and fill the gap at 52 half, and buyers can still be active at the 52 to 54 zone, at the 47 quarter to 49 quarter zone. So, this is something where we are going to have to identify the strength or weakness of the market in real time, see whether we're seeing any signs of directional conviction or trend potential. And if we are, then we just have to be careful on the fade setups. Otherwise, you can find good fade setups on both sides, on the long and short. So as the market goes down, let's say into the 52 to 54 support, as long as we're not seeing signs of a complete trend down day, that can still be a good long setup on first test. And by the same token, a first test of the initial resistance zone, 74 to 76, can still serve as a good short on the day time frame, because we may not really make any big directional moves, and the market could simply just consolidate and balance within this recent range that we've established over here. So we are just going to have to spend a little bit of focus on figuring out the type of day that's setting up. Is it a high directional conviction day, or is the AD more neutral, as in is it more plus 1200 minus 1200, which usually means it's a very balanced session. Are you seeing a balanced tick, right? So are we seeing similar values on both sides of zero? So when the market goes up, do you typically see plus 6,700, and then when the market goes down, you see minus 6,700? That would indicate a balanced session. And then, on the flip side, if we're seeing a lot of conviction, as in a directional advanced decline line, the tick printing, either very high or very low values, and then holding below zero, then we know that there is some directional conviction in the market, and it's best to find good trade location in direction of that trend. And as long as that's not the case, we're looking at a balanced day, a two-sided day, in which case, again, you can find good short-term setups on both the long and short side. So so far, that's the scenario that happens to be in play. The scenario of a two-sided market, which means that even if we don't hold initial support, it doesn't really mean that the market is all out bearish. It simply means we're balancing in a big range. And again, we can still find buyers at 52, 53, at 47 quarter, 49 quarter, and on the upside, we can still find sellers as early as 68 half to 70 half, and then 74, 76, and then back up towards yesterday's high. We can still find sellers active at those areas as well. So those are our main thoughts heading into the open. Let's keep the econ calendar in mind, and just overall the current context, and we will take it from there.